Just turn this recorder on. Just for the sake of clarity, let me open up something over here. Let's close this. And this was a box trade that I got out of early. Oh, someone just popped. Oh, it's Tony just popped in.
Yeah,
Yeah, you see
yeah,
this?
there goes the neighborhood.
Yeah, oh, I know, I know. So you see this? I don't want to draw a triangle because it's going to set up a trade if I do. But rectangle. But this was my box trade here on the. Oh no, it's the euro. Wait a minute, that was the euro dollar. Let me find my euro dollar. Oh, I must have deleted the chart. Okay, I had a euro dollar trade that I a box trade that when I entered it, the pair stayed sideways for quite a while. I have to find the chart now. I thought I took the chart, took a picture of it, but the pair stayed quite a while in that range. And as it approached the weekend and the news got to be a bit more bizarre around Europe, or Greece rather, I exited the trade with a 20 pip loss. And
Yeah,
I'm glad I did because by Monday it was 140, 145 pip gap down.
yeah,
Yeah. That was that was nine. That was the first losing trade out of the last nine. But I exited that trade early just based on some fundamental stuff. It never really got very far because it stayed sideways. And I'm just trying to find that. Give me a second. I'm on a different screen here. Hang on. Um, and it should be a euro dollar. And where is it? Right here. Okay, yeah, now you can see it clearly now. Okay, so now let me close this, open this up, and let me take this expert off so I don't mess anything up. Now I can put my box in and you'll see where I was.
yeah. You're working on another screen,
Oh,
Lee.
yeah, I'm just trying to get everything
Oh, okay.
set up here. How was your weekend?
Oh, pretty crazy. There's they have all these free concerts here all summer long, and so Friday was Eddie Money and Joan Jett.
Wow, that's pretty cool.
Yeah, and about 2 months ago, or a month ago, was Chicago. That was free.
Um, I have a friend of mine's in the room now. His name is Andre. He is uh, guy we worked together some years back when I was teaching at the city.
Hey,
He
how
would
you doing?
pop in, and he'll be here on a semi-regular basis.
All right.
This was my box trade I'd set up, and you see my entry right over here off this black candle.
Yeah.
I had to redraw the box, and that was my projected take profit. And this was the shouldn't have been stop. Stop should have been here. I'm not sure why it's drawing it that way, but um, you see what happened from the entry here. Look how long it's, and these are 4 hour candles,
Hmm.
and it's bounced and bounced and bounced and stayed in here forever. And then I decided to exit right here because I didn't think it was going to go anywhere. And
Why didn't it take you out in
I
that?
took myself out.
Yeah, but why didn't it take you out on that one candle with the big tall wick on the bottom?
Oh, because I had a manual stop loss put in.
Oh,
You see this red line? Like in the robot, I can choose to put a manual stop or a stop on the box.
Oh, but
And
why did you
because
have to
it's,
stop so deep?
well, because it was a 4 hour chart,
Oh,
and I knew that the this thing was going to pop real hard one way or the other because of the news, because of the whole situation with Greece.
oh yeah.
So I wanted to give a little bit of float. So if it, moved in my direction, or if it would wick up or down a little bit, I'd still have a chance to get in the game. And I'd won 8 trades in a row, so I had a little bit of, I don't want to call it play money, but I was risking their money rather than my money.
Hmm.
You know what I'm saying?
Absolutely.
So that's why, in this particular case, just because it was the euro, I did that. With the pound, it's generally not as volatile. Okay, so the pound and the same thing wouldn't be as bad. So I would keep it, right at the back side of the box. But let me go to this because I'm going to touch on these, then disappear. Monday is my paperwork day, and you see my screen here, right?
Yep.
Okay. Now this is a Heikinashi Smooth, and what it does is it's using some math, using a couple of tweaks in the math to make this a much smoother look than the traditional Heikinashi that comes with MT4.
Hmm.
And you have the indicator.
Right.
All right, this is the 50 moving average. Oh, 55, I should say. Wait, let me just, there should be a 55 because I like my fib numbers. Okay, and this is a 1 minute chart. So now let me go down. There's a couple of ways to trade this depending on what you're looking at. And this was off of a 1 minute chart. So the most obvious is the cross of the Heikinashi and the 50. Okay, that's number one trade. Number two trade is a bounce off of the 50 with a color change back in the direction of the 50.
Okay.
That's a number two trade. A number three trade would be these pullbacks.
Mm.
Okay, as long as we're in the direction of the 50. So there are three different ways to get into this. Now, the key with this particular version of Heikinashi, and this is what throws people. I'll show you on another chart. There's another system that I have. Um, well, another was this is somebody else's. I modified it a little bit. I want you to see something here. You see where your bid line is,
Yeah.
but look where the Heikinashi candle is.
Okay.
All right. So if you're thinking that this bid line is going to line up exactly with the open and close of a Heikinashi candle and keep moving, it's not. That's a very important distinction to understand. So from this candle to the bid line is usually about the spread unless you get a runaway market. And by a runaway market, I mean maybe something like this, like where this candle is right here, but your bid
Yeah.
line could actually be down here somewhere. Did you follow me?
Yeah.
I don't have an example of it here to show you at the moment, but you'll see that when you get a fast, hard moving market, this candle will stay way up here, and yet your entry price will be down here. The key thing to look out.
And that's right.
Hang on, two people are
So
talking at
is
the
that
same time.
oh,
Uh, Let me take it one at a time.
was that
Andre,
the sure, was that the spread widening because of liquidity or something that it's
um,
raised hard so
no,
far?
well, no, prices fell because more buyers came into the market here. Um, but what I'm talking about with the what I let me get my head straight. What I was trying to explain about the bid line is that the bid line doesn't necessarily correlate to the Heikinashi candles the way it does with regular candles, and it's something to watch out for. And I'll show you if I put the regular candles. Oh, let me go back this way, and let me just make this regular candle chart. Now you see where that exact candle is, and you see where the bid line is. You see it follows.
Mm-hmm.
Okay. The key with Heikinashi is when you see this first bit of blue right here, that's when you'll want to take a move on the trade. Your entry by price will be a few pips away, but
Mm-hmm.
because the Heikinashi eliminates most of the noise in the market, you won't get confused by these gyrations in market price here, here, and here. All of this looks very, very different when you're using traditional candles.
Mm.
All right. And one of the ideal situations to look for is, I can show you where on the chart it is. Let me go back to these now. In an area like this, when you get the Heikin Ashi candles and the 50 moving average are all touching and crowding each other, it's at that point that the bid price and the candles are all in alignment. So these are ideal spots to get in because your entry will be very, very close to where it should be, or where you would traditionally expect it to be. But I'd have to show you that in a live situation. Here's one now. You see where these Heikin Ashi candles are touching the 55? And you look at the bid line. Well, the bid line's gone away now, but when the bid line was right here, that's when everything was in confluence, right at that point. Tony, you were going to ask something? Okay, I guess not. Daryl?
No.
Sorry, mate. I just had to
Okay.
unmute. Yeah, no, I was going to ask exactly what you did. I was going to get you to put the candles or the clothesline back on so that we could see what it was doing in history.
Oh, put the clothesline? You mean the ask
Well, I
line?
was going to say you could do that, but you did it with the candles instead. So same result.
Okay.
We got to see what the real price action was doing at the time.
Right. So when they all get real tight together, these are great places to enter this. Really, really great places to enter this. And even from this point where we were a minute ago, it's moved up 4 pips, which is, not quite our goal, but you get the idea. All right. So I showed you, this is the one, is the cross of the 50. Okay. Number 2 is the bounce off. And I'm doing these in order of probability and strength. Okay. This is the highest probability. This is second highest, and this is third. 3 ways to do this. And this is all done on a 1-minute chart.
Mm.
Okay. Now, the next thing with the 1-minute
Hey,
chart.
Luke, can I ask,
Yeah, go ahead, Andre.
why you said one was the highest probability and so on. Why was that the highest probability?
Because in most cases, you'll get the largest move from a bounce off of the 55 or the cross of the 55. These pullbacks, on occasion, some of them can be very strong, some of them can be weak. And there's not much of a way to know that ahead of time. But this cross usually will produce a decent movement for you. Like here where we went sideways, there wasn't much going on, but this is obviously the overnight market, this area here. And we can see that by going to this chart. And let me just get rid of the candles here. All right. You can see here when we're in this blue box, which is the first 3 hours of the market, that's when you have most of your volatility. So here's a bounce off, and that produced a decent move. And here we had the close below. And in this particular case, Andre, one of the things we set up for the last couple of weeks was to go for 1% a day. And we were using a $5,000 account. So those were the parameters we were working with. And if I go into London, or into New York rather, you see here the close above produced a fairly decent move. And you'll see I'll always put this up here because that's in reality where the price would be.
Yeah.
And you stop at your swing low. Same thing here, the bounce off. All right. And then here are 2 pullbacks here, like that, and then like that.
Yeah.
All right. Now these 2 systems have slightly different rules, even though they're almost identical. This guy uses the stochastics. I don't. But in my short-term trading, in my 1-minute trading, I happen to like these settings on MACD because they're very, very good at catching the short-term trend. And I'll show you with MACD is every time MACD crosses 0. Oh, and by the way, there's this other moving average here. This is the 55. I always put a 200 on because I just love the 200. But the original has a 55 moving average. And you can certainly change that if you prefer to see this moving average hug prices a little better. But oh, excuse me, guys. Conventions take a lot out of you. So, and this is why I don't use the stochastic and why he does. I prefer just the MACD because here when my MACD breaks zero, you see stochastics is giving me a possible short signal. And as we know from prior lessons, stochastics is not designed to be used in a trending market. Okay, it's not designed to be used in a trending market, stochastics. But I just put it in there because that's how the original was. I didn't like it, so I just eliminated, and I prefer my scalping MACD settings. Okay, which are 24, 52, 18. All
I
right,
see.
I just happen to like those because they catch the short-term moves very, very well. Also, with the 1 minute, I can also use the higher MACD, okay, as my entrance. So here I have a MACD is continually getting longer here. All right, then MACD starts to get short. It closes below the signal line here. Once MACD bounces off the zero and makes a longer MACD than the prior MACD, even with regular candles, not necessarily with the Heikin-Ashi, even with the regular candles, this is a decent signal to jump back on board. You see that?
Yeah.
Let's look at the
Nice and
downtrend.
clean.
Excuse me? Andre, what was that?
I said nice and clean.
Yeah. Now this
I
is a
said nice.
dead time. Yeah, this is a dead time in the market that we normally don't trade, but you could see from this point here, for the most part, price went down. Now you would have been a couple of trades would have been stopped. Well, a couple of my trades would have been stopped out here, possibly because we use relatively tight stops. Well, I do anyway. But if this is my entry, this green candle, and I'm going to use a 13 pip stop, I actually would have been okay. 13 pip stop would be up here. And remember, my 13 is 10 plus a 3 pip spread. So actually, on this entry, I certainly would have made my 1% for the day, as you can see, and would have never been in any danger of a stop. Here again, we break the zero right here, and my entry is on this candle. 13 pip stop is down here, and I need 8 to make 5, so we would have been okay right in there. And let me roll forward a bit. And I think that would have been it for that. Okay, that 8 to make 5. Same thing here. We have our MACD below zero. Now, I sometimes take these, okay, but I want to make sure that my Heikin-Ashi is matching it also. Most of the time it is. It'd be very rare that it wouldn't be. All right, but just taking the straight zero trade would be here. This one might have been, oh no, we made it. Okay, we need 8 to make 5, and we got 13. Here's the long trade here. All right, and then we need 8 to make 5. We were okay there. Here's the short trade here, and we need 8 to make 5, and we would have been okay. 13 pip stop. We would have been in decent shape. So this particular MACD setting I happen to like on 1 minute charts, for that reason. On occasion, I do take the closes below the signal line if I feel the need to jump in early. And if this matches it already, then I'll take that also. All right. But these are the MACD settings I prefer because I don't like using the stochastics because the stochastics are not designed for a trending market. And now let me put this back to a line chart.
Okay, was is this chart, is this also smooth?
Yes. Different settings, I believe, though. Let me just go back. No, this is 263. And they both be set to 263. I have another template with a different setting that's for faster. And this is 263 also. Okay. So they're both the same. I have to make the other template and send that to you. I have one that's a bit faster. Now, this one, I don't use the MACD. This is another way that the Heikin-Ashis are traded. I'm going to go to a 15-minute chart, but I want to take all my trades on a 1-minute chart. Okay.
Okay.
Now, in this case, what I'm looking at is I'm looking for this particular Heikinashi. I'm in the downtrend on the 15. Okay. I've got my pullback. When I get the first complete red Heikinashi, which is this one, I'm putting a line on that, and then I'm going down to the, let me just delete these two so I don't get confused. Okay, I'm going to mark this line, my first complete Heikinashi bar, and I need to show you what that is also. You see how this Heikinashi bar is red and blue?
Yeah.
Okay, this one's red and blue, this one's blue and red. I need the first completed bar of a solid color. I mark that bar. Then from this point, I go down to my 1-minute chart and I look for that marker I put in. Let me go backwards. This 1-minute chart, we got to go back quite a way. All right, where's my marker?
I think you just passed it.
Why? I didn't see it.
I didn't see it either.
Yeah, I saw it.
Let me go back to the 15 and find the date. That's the easiest thing. It's 26 at 23. Okay. So 26 at 23. So 2600 at 23. So we got to go back into the prior day, it looks like.
26. That is the 26th.
Yeah, but 2300 hours.
Now you're in the 25th.
Wait a minute. So where's my line?
26, 23.
Oh, let's start again. All right, we're gonna blow right through the weekend here.
You gone past it?
No, not yet.
No. Oh, there it is.
I think in the chart settings. Oh, yeah.
That's it.
Plus in the chart settings, it lets you type.
It might. They used to have this thing down here where you could do it, but I could never get it to work right. This, you could type the date in and it'll bring you right to that candle, but I could never for the life of me get it to work right. So that's our 15-minute
You can also
marker.
drag that little.
All right, that's our 15-minute marker. And what we're looking now are for bounces or trend line breaks on the 1 minute. Okay, and you can see them here. Remember that your bid line is going to be lower than this actual point. You're not getting in right here. You'll be getting in over here somewhere. So keep that in mind, okay? Unless prices are touching this 55, and then those are really great trades. All right, so let me, this market ran away a bit, but you can see how it becomes pretty, all right, I can't do much about that display there like that because of this runaway market. Okay, let me see. No, I can't do much about it, but you get the idea. All right.
Lou,
Yeah.
can I ask a quick question because I came late, unfortunately? So this is that's a 55 moving average and normal Heikinashi or Heikinashi smoothed, or what is it?
It's the Heikinashi smooth indicator that I dropped in the room.
Right, so Heikinashi smooth. Yeah, I couldn't get those indies or the templates, but anyway. So that's all it is. Yeah. Okay, that's simple enough. Yep. Okay.
Yeah, it is.
You actually dropped 2 templates in the room, if I remember.
Yes. I found another template that had some promise, but there were a couple of things on it I didn't like, and I added my own spice to it. You know what I mean?
Okay.
And made it better suited for me.
Okay.
So now I'm going to go back to the 15, and now I'm looking for the first blue. Now I'm only taking this just to show you the premise. Normally I wouldn't because it's counter trend. I would prefer to get above here. But I just want you to see on my first full blue indicator, I'm first full blue Heikinashi, and then I'm back on my 1 minute, and from that point on, I'm only looking for long trades. Oh, there it is, right here. Okay, so I have this pullback here. I've got this. I've got this. So this is a nice one. And again, with a 15 pip stop is way down here someplace. A 13 pip stop, I should say.
Why 13?
10 pips plus the spread in case there's a sudden movement. Because remember, you're on a 1 minute chart.
Oh,
And
yeah.
you know, anytime the candle could just take off, and it'll happen so quick that you're you know, you could get jammed up. So I prefer to protect that. And I put the spread because a lot of times price will move in those increments of 10. And by
Yeah.
putting the spread on, it keeps me from getting popped.
Lou, another quick question. What causes you to get red and blue on the same candle?
Okay. Now the Heikinashi, the math behind it, and I needed to confer with Rob on this. Let me put a regular candle in here. Ugh, that doesn't tell you very much. Well, the simplest explanation is that the math to create a complete blue bar or the conditions to create a complete blue bar are not here. And neither are the conditions to create a complete red bar. That's
Okay,
just
so
the
the
simplest.
Heikinashi smooth indicator creates that like that, yeah?
Yes, it does.
Oh, right, okay, that's fair enough, yeah.
Okay. And okay, so we did so from here I'm looking for long trades. And then again on the native one, this would be an entry here. All right, remember the cross of the 55 and the Heikinashi would be a decent signal also. All right.
Okay.
And that's the simple way of doing this on a 1 minute chart using the 15 to mark your trend.
Okay.
All right. And if you're only looking for that 1 or 2 trades a day, this is a very, very effective way of going about it. And again, it's a special indicator. We didn't get to special indicators yet, but we will. We'll do like a week only on special indicators. But this came up in conversation with Daryl, and that's why I throw it out there so you could, you know, take a look at it and work with it and tweak it. You may find a tweak of your own that might be beneficial to all of us. You
And
follow me?
it's specifically for trading on 1 minute, is it, Lou, rather than 5 or 15, or?
Well, you can certainly do it on higher time frames, but the way I came across this was looking for 1 minute trades
Okay.
because 6 or 7 years ago, that's what everybody was talking about was trading a 1 minute chart.
Uh-huh.
And you know, being a member of the human family, I got caught up in the crowd psychology, and I started looking. So I found a bunch of them, a lot of them that actually do work.
Yeah.
But my focus at the time were the longer term trades because,
Yeah.
like I said, when you look at how much you get paid per hour, the longer
Yeah.
term trades pay you better. And I come
Yeah.
from a background where I used to make like anywhere from 40 to 60 bucks an hour as a construction worker in New York,
Yeah.
depending on the job and all that. So that was the
Yeah.
mindset I had, you know, back
Yeah.
then.
Yeah.
That's how I measured income was how much you get
Okay.
paid by the hour.
Yeah.
So the long-term trades pay you more per hour.
Yeah.
Now I've traded a lot of 1 minute, as I said, when I do the hyper scalping, I'm on a 1 minute chart.
Yeah.
So, but this is too. I have several others, but I don't want to overload the room with it, and then we get so far off course we never get back.
Yeah. Okay.
You got me?
Yeah.
So this is the Heikinashi smooth indicator. And do you have it, Daryl? I mean, Mike?
No, I couldn't get them out the room. So if Daryl's listening, perhaps he'll email them to me later.
Okay.
You didn't get the templates?
I didn't get the templates or the indie.
I don't think he put the Indy in there.
Yes, I did.
Or you did?
Yeah, the only one I could find on this computer was the EX4. I've got the MQ4 somewhere, but you don't need it.
Oh, okay. Actually, I have those anyways.
Let me just see here. Yeah, I did send it. Oh, Phil resent it in the room also.
Yeah, I know, but I'm Phil and I aren't contact, so I still couldn't get it.
Oh, okay.
And
So,
for whatever reason, it doesn't seem to work for me mostly. So Daryl usually kindly emails me, and I get them that way.
Oh, okay. So you'll take care of that, Daryl?
Yeah, he compensates me handsomely, so no problem.
Oh, okay. All right, that'll
Thank you,
work.
Daryl.
All right. So any questions on either one of these? Let me go back to the MACD one. I
Oh,
have to.
I missed that one completely.
Oh, okay. Now, in with regular candle trading, when I'm on a 1 minute chart, I happen to like these MACD settings, which is 24, 18. I'm sorry, 24, 52, and 18,
Okay.
because for me they help catch the short-term trend very well.
All right.
And what I was doing, using them in combination with the now this is the 55 from
Yeah.
the other one, and
Yeah.
this is the 200 that I always have on every chart.
Okay.
All right. But what I'm looking at here is in this block of time, which is the first 3 hours of London in this case,
Yeah.
and then the first 3 hours of New York in this
Yeah.
case,
Yeah.
I'm looking at a break of MACD 0.
Okay.
All right. And then I'm looking for my 1% a day. Well, I'm looking for more than that, but if we would do it using the parameters we have set up,
Yeah.
for here, the 1% a day, I need 5 pips to make 8. I mean, eight pips to make 5.
Right. So you take the first blue candle for a long that
Correct.
closes above the 55. Yeah.
Yeah. And MACD break.
Yeah. MACD breaker 0.
Correct.
Yeah.
Now here we have a situation where if you remember the lesson on MACD, when you
Yeah.
see these MACD bars getting shorter, as
Yeah.
long as MACD is above 0, these shorter MACD bars only represent a pullback. They don't represent a complete change in direction.
Yeah.
Okay, so if MACD is above 0, we're going to go long, and these shorter MACD bars represent the pullback.
Yeah.
So the other thing that I look for is if I get a pullback like this in the MACD, if I get a longer MACD, which this one is longer than the prior, you see that?
Yeah.
I don't know if it shows up on your side. Let me do it this way. It might. Here we have so this MACD is longer than the prior MACD histogram.
Yeah. Yeah. Absolutely. Yeah. Yeah.
Right, and then I'm in there.
Yeah.
Okay, I go long there.
Yeah.
And then looking for 8 to 5. Now I had different ways of exiting before. I don't want to get caught up in that at the moment. But
Yeah.
here again we have a pullback to 0,
Yeah. Yeah.
and now we have a longer MACD right here.
Yeah. Yeah.
Okay,
So those little pullbacks you kind of treat like almost like 1889. You just draw a line or you could
similar.
draw a line.
Yep.
Yeah. Yeah.
And some people, they see it better than 1889. So that's why I don't confuse the two. That you got me.
Yeah.
And this way you're just looking for a solid. You're just looking for blue
Yeah.
on your Heikinashi. Now the other thing I have to point out is, and this is important, this is your bid line here. Do you see that,
Yeah. Yeah.
Mike?
Absolutely. It's always a long way away. Yeah. No, I
It-
understand that. Yeah. Yeah.
okay, good. So as long as you understand that's the phenomenon, that's why
Yeah.
when this changes color, let me put the regular candle in. When that changes color,
Yeah.
when that goes from blue to red,
Yeah.
basically you're looking at this entry right here.
Yeah.
Okay?
Yeah. Yeah. Well, I
So
quite often have Heikin-Ashi and normal candles on the same chart. So
yeah,
yeah. So you can see anyway. Yeah.
absolutely. So just to be aware, because this throws people off, they think that they're going to get in at this price, and they're not.
Yeah. No.
All right. So, and again,
Yeah.
the way the original was done, he had the stochastics, but as you know, stochastics are terrible to use in a trending market.
Yeah. Yeah.
You got me? Because this is a stochastic cross short in an uptrend.
Yeah.
I mean, you get killed on all of these. Look
Yeah.
at
All
this.
of them. Yeah.
Yeah, every one of them was a losing trade. So stochastics is not designed for a trending market.
Yeah, 24.15, 24.52, 18. Yeah, okay, got that. Yeah.
Yeah, for the short term, even if I didn't have the Heikinashi smooth, this is still good even on the regular candles. But for a smoother visual, and again, because you're looking at charts as a visual world, some people like this better. And you go with what works for you. Go with what you can really see.
Yeah.
That's always the case. Don't pay attention to what I say if it's not fitting you like a
Yeah.
glove.
Yeah.
You got
And
me.
is that one also the Heiken-Ashi smooth or the normal Heiken-Ashi?
This is Heiken-Ashi smooth. This is
Yeah,
not.
okay. Yeah, because the
Yeah.
Heiken-Ashi smooth you can't fit into the normal candles like you can with a normal Heiken-Ashi. So
Correct.
yeah, okay.
And that's the smooth. Well, you could like if I shorten this up and make this a let's make this a 3.
No, I don't mean like that, Lou. Sorry.
Oh, okay.
Don't change your settings. I mean, if you have a normal candle that's not filled and a Heiken-Ashi on the same thing, then they're in the same place, so to speak.
Yes. Yeah. Well, like they are right now.
But you can't do that with the Heiken-Ashi smooth, obviously. Yeah.
No, not unless you change. You can get it a
Not
little
unless you
closer,
change the
but
settings. Yeah, okay, I got
right.
you. Yeah,
like see right now they're matching pretty much.
yeah.
That's ideally where you'd want to jump on board with this.
Yeah.
All right. So we will come back to this later in the week. I do want to focus on a couple of other long-term strategies that are relatively simple, and we're going to continue looking for our 1% a day later in the week. Just so quickly, are there any questions on this particular setup or with the this particular setup?
The on the other one, the black moving average is what?
55.
55. Okay.
See that?
Right.
And I always have a 200 on because I always look at it. I don't have one on this because the way this was set up was that you this one indicator does all the work for you. It does the trend and the entries, so there wasn't a need to put more stuff in.
Yeah.
You know what I'm saying?
Mhm.
Sometimes you can overthink it.
That's what I thought.
Yeah. All right, so you guys can take a look at this during the week, and if you have any tweaks or suggestions or whatever, definitely come back to it, and then we'll take a week and we'll trade one of the two the same way we did with the 1889.
Yeah, it looks good.
All right.
Hey Lou, where can I get the indicators?
Oh, you know what? I don't know how to add anyone to the step-by-step Skype room. Does anyone know how to do that?
Well,
I will email them to you, Andre, just to quickly answer your question.
let me see. Let me take a look and see if that's easy to do.
Okay.
Yeah.
Let's see here.
We have a Skype room, Andre, that we congregate in, and sometimes it's very active, sometimes not so much, but anytime you got a question or you want to share some information or whatever, you can drop it in there and you'll always get a response from myself or somebody else. So it's a pretty handy way to bounce some stuff off. Does your email show up over here? No, it doesn't.
Okay, I think I can I can add him, but he's not in my contact list. So
Right. Well, you could do a search. Are you on Skype, Andre?
I haven't been in a while. I can go and check.
Okay.
But
Well,
I can if I'm not, I can make sure I add myself to it. And I just as we speak now added my email in the. You should see it now. I just added my email with the name.
oh
But,
yeah, I see. Yeah, andre.barnes@gmail.com. Okay. I see that. All right, so we'll work on that during the week then.
Okay.
Because, like I said, normally I'm not here on Mondays, but I promised I'd be here today because he asked about those the Heiken-Ashi.
Yeah.
All right, and as you can see in this current trade right here on the pound dollar, you see where the Heiken-Ashi matched that conditional candle.
Yeah.
We were already red, so you're looking for any reason to go short when you have the red Heiken-Ashi, and then sure enough,
Yeah.
I guess that was our 5%. Yeah, the 1%, that was it. Right there. Okay. So it's all good.
Yeah.
All right. I will see you guys tomorrow then, same time, same place. This was recorded and I'll have it up in the room before the end of the day.
Oh, lovely. Thanks, Lou.
All right. Okay, guys, I will talk to you tomorrow.
All right, thanks.
Yep.
Okay, cheers.
Be well. Bye-bye. Okay, have to go over here.